doesn't have a clue. And so the one that's been planning this has already emotionally started moving through the process. And so the other one is just starting from the beginning. So what I like to do is go back to the numbers. Let's look at the last tax returns. Let's look at what assets you had there. Because if you have a business, there's a lot of different ways that I've seen that people have. They've paid for their own personal expenses in there and written it off as an expense.
Any difference if it's a corporation or like a Schedule C on a tax return, or is it?
It does make a difference. You know, if it's it makes a lot of difference whether it's a C corp, an S corp, or a sole proprietor that's just a Schedule C on your 1040. It all makes a difference, but the bottom line is it still brings inequality into what you're getting because it's a way that people hide assets. So that
Suppose somebody had gold bars and a safe deposit box in Tucson Divorce in Phoenix or someplace else. Is there some way?
The money had to come from somewhere. So if you're
looking at the source of the money?
I look where the money is going, where has it come from, where is it going, and you can find things. The books tell a story.
So you're going to be sort of doing almost like an audit to tracking the money to see if there's a discrepancy in terms of expenses versus income and where there's extra money coming on.
There's kind of a cross of forensics and auditing. There are different techniques that you use to look through things, and you can find them.
One of my favorites anecdotes on this is I had a couple once who got divorced, and then they both had to buy new houses. And what ended up happening was they both went to the same mortgage broker, and the husband went to the mortgage broker first and gave him all the information. And then the wife went to the same mortgage broker, and the mortgage broker said, "Do you own an interest in the house in New Hampshire also?" And she said, "What house in New Hampshire?" So sometimes I guess the mortgage applications tell a story also where people want to do that. But I was always fascinated by that asset, which sort of got discovered purely coincidentally. I know it seems to be another problem with assets is valuation. How do we move about valuing assets?
It depends on what the asset is.
Give us some examples.
A business, you can value it by the cost of the assets, what the assets are worth. It can be by the income approach, which is if you have rental property, how much income does it bring in? Does it pay for itself? Things like that. If it's collectibles, you appraise them. I'm a jewelry appraiser. We manufacture jewelry. So in something like that, you take the intrinsic value of the metals and the stones and things like that.
Though one of the problems I've seen in a lot of divorce cases is sometimes the appraisals themselves are expensive to do. You know, if you have a marginal business and the cost of the appraisal is extensive, is there some other way of dealing with that at all? So you can balance the cost of the appraisal versus the need for the information?
Well, you can go by some of the cost, but what is the cost of not knowing? You know, you may think that something is not worth something, and you can find out later that it was.
Well, we've been concentrating a lot on assets, and you've been real helpful on that and very informative. But what about a little bit about some of the debts and loans? Does those present other issues?
They do. And the problem is, well, even if you look at your bank accounts, your assets, it's the first one to the bank. If you're in a joint account, I don't care if it's a partnership with another person or if you are in a marriage, when you're tied to someone financially, you're at risk. Now, in this case, in a marriage, it's the first person to the bank that gets the money. That's really what it is. I mean, you can try to freeze assets, something like that, but that's pretty much what it is.
Do you see that where the people empty out the bank accounts?
Absolutely. Or the other, if one of them goes and cleans out the checking account, the other one has the credit card.
Any recommendation on how to avoid? How to avoid that? If a couple, if somebody comes to you and says, they're contemplating divorce.
Well, you want to try and freeze it if you can, and you want to go to the credit card companies and write a letter stopping, where it's at right now. But whatever's been charged up to this point, if you're joint, you're joint. And so they will come after whoever has the money because it's a joint account.
Have you had any luck at all when having the couples talk to each other and avoid that, like taking an account and splitting it in advance and saying, you're getting divorced, let's take this $10,000 and each take $5,000 or something like that?
Yes, we have had some good success with that. We had one client that it was a little rocky, I'll give you that, but we did set up a checking account, and they both brought in their expenses, and we wrote the checks together. You know, I wrote, you know, with them, and they each had to sign the check and pay the bills, because not only do you want to separate assets, but you have to put together a budget, because if you're looking at how you want to equitably separate your funds and put together a settlement moving forward, you need a budget. You need to know where you're at. How much does it really cost you to live? And if you have kids, what's it going to cost later?
That's a good segue into my other questions about income, allocating of income. Do you deal with that at all in terms of some of the couples, in terms of here's a one, you know, how they have making salaries, they each have expenses, separate houses, helping them at all?
I do some work with that. A lot of it is pretty straightforward until there's children. Once there's children in the mix, and it's a lot different.
Why is that? Why is,
well, because
so?
you have to think about the costs of supporting the children going into the future, and so that's going to bring more things to the table. And there's, you know, health insurance for the children. There's, you know, education.
So how do you deal with that?
How are you going to?
How do you deal with some of those issues?
Well, sometimes it's easier than others, but we try to put together a plan where both of them contribute, depending on the financial situation of the parties involved. You know, there's some people where one spouse hasn't worked and the other one has, and sometimes they're, you know, where they can both be involved in the making the payments. It's a lot easier to try to.
One of the things I think people aren't always aware of, maybe you can help enlighten on the difference between alimony and child support for tax purposes.
Alimony is taxable to who receives it, and it's tax deductible to who pays it. Child support is neither.
Okay, is there some reason that people might prefer alimony or child support in some situations at all? What's the advantage of paying alimony versus?
Well, alimony, if you're the person paying it, it's deductible. So that's why
There's some income shifting at that point, and the person being sort of a tax shelter, if one person's in a higher tax bracket and the other person in a lower tax bracket?
They might try, but if you, let's say you have alimony and you have child support that you have to pay, the money will, and you pay short, all the money is going to the child support first. Any shortage would end up being on the alimony side.
Arizona is a community property state. How does that affect some of the things? You mentioned a little bit of these things,
Yes.
but how does that affect some of the things?
Community.
We've got so lost in here. I didn't realize that we're.
Oh my gosh.
It is. Oh my gosh! I didn't realize how much.
We're out of
We're
time.
almost out of time, and we've got a few seconds left before I close the show. But do you have any parting words that you'd like to do? It.
You need a strategic financial plan. You need to look at the numbers, because that's what you're going to be living with.
Okay, that's good. Thank you very much. Let me just put you back up on the screen again so people can know where to find you. And you've been watching Divorce TV with Wally Marcus and my special guest,
Shelia Goetz.
And I appreciate you coming. It's been fascinating. I almost ran out of time on all this stuff and doing that. We could probably go on forever, but if you want more information about what we've been talking about, you can see it at the bottom of our screen, and go to our website where you can get more information about the show and our guests and future shows. And you can also watch us on YouTube now if you want to, and you'll get that on our website as well. So once again, thank you very much for watching Divorce TV with Wally Marcus, and then you'll see the YouTube where you can catch us for future shows. Thank you very much.